Wow, it's been what, about a month since we did the last weekly sense? We've been kind of busy, haven't we, Carl?
Yes, we've been busy with all kinds of things and earnings season.
Right. Yeah. I mean, we took a little bit of break to get the trading platform up and running and the new models initiated. But now we're ready and excited to kind of get back into it. So, the last few weeks, we've run through earnings season, and it's kind of been a little bit of a disappointment, even though companies have, for most relative purposes, beat both top and bottom line. Their stocks really haven't gone anywhere.
Right. So this is something that can often happen in the stock market. It's not about where things have been, but expectations, and sometimes not even analyst expectations, but what are just the market's expectations, meaning all the participants. So the second quarter was this year was really one of the best quarters we've had ever in terms of earnings with respect to growth, of course, because second quarter of last year was the lockdown as the pandemic started.
Sure.
So companies, about almost 90% of companies beat sales and earnings estimates.
That's huge,
And
right?
then,
Just to put that in context, that's pretty big.
right, that's about as big as it ever gets. And earnings, S&P 500 earnings grew about 90% year over year as well. And as we went through all of our companies and many of the ones that we were watching, I mean, almost all of them beat sales and earnings estimates by a wide margin, but it was very rare actually to have a stock go up.
Yeah.
And even Alphabet, which was one of the most impressive quarters, the stock was only up 3% after reporting.
Yeah, they blew their numbers out of the water.
Right. So that just kind of speaks to where everything is, how far the market has come from the bottom in March of 2020. It's about doubled since then,
Right.
and how everything is kind of fully and fairly priced.
Sure.
So that's why we've gotten a little bit more cautious, a little more defensive, trimming and selling some overvalued positions. But we're still also looking for interesting growth stocks that we've been watching, that have maybe drifted lower or fallen victim to some of this action recently.
Yeah, if you look at the big movers that really are moving the market, you've seen the likes of Amazon or Alphabet or even Facebook. They had a pretty monstrous move going into earnings, and then kind of a disappointment as far as moves since then. Ex Amazon, which kind of came down a little bit from I think the 37 or 3,800 level. But and that's kind of indicative of what's going on, at least in this stage of the cycle, where maybe earnings estimates for the full year maybe have gotten a little bit ahead of themselves. Now we've got the Delta variant that's coming up. We don't know what the infrastructure bill is going to look like. What are tax rates going to be going into the end of the year? So I just think there's a lot of potential uncertainty, over the next 5 months of the year. And some earnings analysts and some companies are kind of guiding towards the last half of this year.
Right. The third quarter of every year is usually when, if you're going to see any volatility, you see it. In the average year, you get a drawdown in the 10% to low teens range on the market. It doesn't happen every year. I mean, there are some years when things just go up and you never see more than a 3 to 4% pullback, but that's actually kind of rare.
Yeah.
And it's that 6-month period from May to Halloween where you see the volatility, but most of it is really,
Sure,
can happen starting in August, September, and through the middle of October. So that's kind of what we're watching for a bit. But
yeah, it seems
there are a number of
uncertainties.
uncertainties. Right, there are a number of uncertainties this year around the Delta variant, and I have a feeling that maybe other things like tax reform, et cetera, could be more surprises that people are not really putting into their estimates. It just seems like every time there's news regarding COVID or the Delta variant that comes out, the market, it's old news. The market's
Right.
known about all this stuff for over a year, and it just seems like everything is really numb to it at this point.
Yeah, I completely agree. But there's still opportunity out there, and we've been proactive in looking at even the growthier names in our portfolio and on the watch list. And I know we did just add to Peloton. We initiated a position in Peloton. We've been watching it for almost 3 months now, and doing a tremendous amount of due diligence. You know how big of a fan I am of Peloton, as far as the company itself, the workouts, the equipment. But walk us through kind of just the bird's eye view of that position.
Peloton's all about home fitness classes at home. So there are a lot of people who like fitness classes, cycling, and they used to go out a lot for it before the pandemic. Once that happened and gyms shut down, everyone had to do things at home. So Peloton really started growing a lot once that happened.
And I think at the right valuation, the way I try to look at the world now is almost biblically, from the standpoint of there's BC before COVID and AC after COVID, right? So we're going to be living in these two different worlds, and there's some trends, specifically with the amount of individuals that are picking up fitness for either the first time or accelerated into it because of the fears of what happened during the pandemic. And there may be a couple of companies that may be primed to reap those rewards. But yeah, today I just wanted to jump on, do a weekly sense recap of earnings, talk a little bit about Peloton. I know their goal is to get somewhere close to 10 million subs over the next 5 years, and they're going to have to do that by creating new product lines, specifically in strength. I know they acquired a new mat company earlier this year with a screen on it. So maybe that, influences a little bit of the yoga market as well. But, like you said earlier, there's opportunities out there, but they've got to be priced right. So you have to be price sensitive in this low interest rate environment when valuations are really extended. And what was interesting to me this earnings season was the dismal amount of movements. And even without big tech carrying the indexes still grinded about 1.5% to 2% higher for the month, at least so far, or over the last 30 days, which was really surprising to me. But I think you were mentioning something about financials earlier today.
Right. Well, the yield curve has steepened a bit in the last few weeks, and financials have been reacting to that.
Right.
Because when the yield curve steepens, banks can get more profitable on their lending. And so the stocks end up reacting before the loans are made.
And I feel like that trend like ebbs and flows, right?
Right.
One month the financials will be in it, and then 1 month they'll be completely removed just based off of a turning of a dime at the Fed or something news related. So next week you've got Carl's desk. What's everyone's got in store for next week for Carl's desk? Can you give us a little tidbit?
I'm thinking of reviewing earnings season and what happened, and going into a little bit more detail, and just kind of give some color around where we are and where we might be going. An earnings season like the one we just saw is rare, because normally when companies greatly exceed expectations, the stocks react in the direction, in the positive direction. And we didn't really see that here. So that's not a real common thing. And it sometimes is something that you tend to see more of at an inflection point. But I mean, we don't really know what could cause things to really change. Things could just keep grinding higher. But I'm going to try to read the tea leaves a little bit to see if there's anything else to see there.
Well, I look forward to reading it, Carl, and I hope everyone else does. So thanks for joining today, Carl. Everybody like, comment, share. If you have any input, make sure you put it in the comment section below. Thanks, Carl.
You're welcome. Thanks, Andrew.
All opinions expressed by Andrew Whalen, employees at Whalen Financial, or any other podcast guest are solely their own opinions and do not reflect the opinion of Whalen Financial. Whalen Financial is a registered investment advisor. This podcast is for information purposes only and should not be relied upon for investment decisions. Clients of Whalen Financial may maintain positions in the securities discussed in this podcast.